Hi, my name is Sasha Moore. I am here with Matthew Porch, who is the head of third-party distribution at Aquamore. Welcome, Matt.
Hi, Sasha, how are you?
I'm good. And you?
Yeah,
Ready,
good, thank you.
ready for a robust discussion about
Certainly am, as always.
state of the market? Excellent.
Absolutely.
So what I wanted to have a chat to you about today is I read an Australian broker recently that you provided some commentary about the volatility of the commercial lending market, as well as talk through some of the key drivers, as well as how that may or may not contribute to the talk of the town at the moment, which is the big recession discussion. So I just wanted to unpack that in a little further detail, perhaps starting with commercial lending and how you're seeing that being affected by the rapidly changing economic market and the drivers that are really contributing to that change.
Yep, absolutely. Yeah, so obviously the commercial lending space is very volatile at the moment. The main driver of that, in my opinion, is interest rates. Obviously, they are going up at a great rate of knots. The RBA's only got one real blunt instrument to try and quell inflation, and that's by increasing interest rates. What that's meaning for the commercial market is that there's a lack of available credit, especially in the private lending space, where funders who are funded by high net worths and investors are seeing a higher demand for a better risk return. And that's leading to a bit of volatility where consumers maybe had more of a choice in the private lending space. That's no longer the case. It's the institutional funded guys and the guys with a big liquidity pool that seem to be coming out on top at the moment. Obviously, house prices are starting to waver in Australia as well. The housing market in Australia is traditionally one of the strongest in the world, but we are seeing up to 5% reduction in valuations at the moment. So it's certainly something that we're keeping an eye on. And obviously all of that ties into inflation as well. We're seeing record-breaking inflation numbers at the moment, and a lot of that is driven by cost of materials, the cost of living. There's obviously a bit of an energy crisis in Europe as well. Australia has been insulated from that to a certain extent, but I guess we'll see how it all plays out in the coming months.
Yes, indeed. And I think you do raise an interesting point about the effect of high net worth individuals and investors from the private lending market, because I know that there is quite a distinction in the private lending space as to how the funds are actually composited. So perhaps just unpack that a little bit further for those who aren't as familiar with those funding structures and what that actually means in terms of investors looking for a higher return.
Yeah, absolutely. I mean, during times of volatility, investors tend to seek safer returns. Those safer returns are at the moment through gold, cash, as well as paying a bit more. Your term deposits and your short-term deposits are starting to pay more now that the commensurate cash rate is increasing. What that means is investors are looking at less speculative investments, and they're just riding out the market at the moment to see how things go. When the cash rate was at 10 points, people had to take a certain amount of risk to get the return that they were looking for. That's no longer the case at the moment. So what that means is there is a lack of available credit in the private lending space. Some of the traditional funders, as I said, they're funded by high net worths or families with a lot of money to put out there. That's starting to dry up a little bit. So the guys that are funded through the banks and through Global Investment Network, these are the parties that are dominating the private lending space at the moment.
Yeah, indeed. And I also understand that Aquamore recently had quite a substantial cash injection from a global investor.
Yeah, that's correct. Our warehouse facility is funded by a global investment bank. You know, we're on great terms with these guys, and you know, we're very happy for their support, and they're very happy with the way we've run the book. And that is that's been evidenced in the fact that they've injected another 50 mil of senior capital into our facility. So yeah, it's all looking good on our end, which is fantastic.
So Matt, there's a lot of talk about the possibility of a recession off the back of some very aggressive and consecutive interest rate rises. What is your position about how Australia is placed from a global perspective in terms of this upcoming disruption?
Yeah, obviously there's a lot of market chatter about whether a recession will take hold or not. My opinion is I think there will be a global recession. It seems inevitable based on the geopolitical and market impacts that are being felt across the world. Australia, in my opinion, seems to be insulated to a certain degree in that respect, whether it's a geography thing or whether Australia still has a very strong export market, which it does with with natural minerals and with coal and with oil, even although it's an unpopular topic at the moment. Australia does appear to be doing very well in that respect. Global house prices have taken a battering, whereas, yeah, house prices have dropped off here, but not anywhere near what you're seeing in the UK and in the US, for example. The US, their yield curve is inversed, as is the UK as well. Australia's yield curve is very much intact, which is remarkable given the global position of the economy. Looking to the UK, for example, you'll see the volatility on the bond market as a result of the budget announcement by the new PM. Obviously, being one of the most advanced economies in the world, that does pose something to be concerned about. There could be correlation risk across the advanced economies in the world. But yeah, look, if anybody's in the best position, I'd say it's Australia, and in my opinion, they will live up to their name of the lucky country.
Okay, amazing. Well, thank you so much for your perspectives, Matt. We'll look forward to speaking to you next time.
Thanks, Sasha. Appreciate it.